Yo, what's going on, guys? Welcome back to another video. This is your boy Mac the Trader, and in today's video, we're going to take a walkthrough of the AM New York session trading as it relates to US 500. So essentially, I'm going to show you guys the perfect trade that took place, what you could have done, what you should have done, and I'm going to walk you guys through this trade as if I were taking this trade live. Now, as you guys know, based on the higher time frame, if we go to the weekly really quickly, we're on a bullish leg right here, okay, with these last two weekly candlesticks, but I want you guys to keep in mind that we are extremely bearish, okay? If you compare this weekly setup to the previous weekly setup that took place right before the last recession that took place in the United States, you will notice that we are on track to selling off very, very soon. And we're going to reach these levels right here pretty soon. All right, so I am extremely bearish on the US 500 and the other index markets, of course, such as the NASDAQ and US 30 and German 30 as well. However, this morning we had an excellent buy opportunity that took place, right? Now, one thing about having a bias when it comes to trading, when you come to your charts, you don't want to have a bias. You simply just want to follow rules, and once you follow those rules, you want to manage your risk. You simply just want to take the trades, all right? And having a bias can essentially end you up on the wrong side of the market. So when you guys come to the chart, the first thing I want you guys to do is make sure that your mind is clear. Make sure you don't have any specific bias. Because how we take these trades, how we take these day trades, we don't really need to flow with the trend. We can take trades against the trend because, as you guys can see, we are very bearish, all right? However, we did have a buy opportunity form this morning, right? So the first thing that I do when I come to my charts, and the first thing you guys should always do, mark up time, okay? 9:30 is the time that I start trading, and I am finished by 12, right? So that gives us a few hours, right, to actually take these entries, take these positions, and carry it out. So once you guys mark up your charts as it relates to the time, then you want to, my main focus is always the M15 time frame. You can use the H1 if you would like, but because we are day trading, I like to look at more information, which is perfectly found on the M15. Okay, we take our entries on the lower time frames. However, the M15 is an excellent time frame to look for our first confluence. So our first confluence that you want to look for is some type of sweep of liquidity, right? Liquidity, of course, is the gasoline that moves the market. All right, resting orders essentially give the market a reason to gravitate towards certain areas and push away from certain areas, right? So that's the first thing that I look for when I am trading. So here we can see that we have a beautiful swing low and price essentially sweeps that liquidity. All right, that's perfect. All right, that's step one. Next, what you guys want to do is you want to look on the lower time frames for some type of reaction to that sweep of liquidity. Right now, before we go down to the lower time frame to look at reactions,
What's going on, guys? My name's Mac. This is going to be just a quick commercial for you guys going over the trading results of our Telegram community. So as you guys can see, we produced 43.9% return on investment. That would be a $43,900 withdrawal from a $100,000 funded account, right? So if you guys want to be a part, if you guys want to take advantage of my higher time frame setups and occasionally day trades, the link in the description that says Trillionaire Mac Trades bot. Okay, it's going to take you straight to my Telegram page, and then you can feel free to communicate with me. Feel free to sign up. Feel free to just join the community, join the live trading sessions, join the live trading webinars, and join my daily trade outlooks so you can take advantage of these trades right along with me.
If we have swept sell side liquidity here, and let's say we get a valid reaction on the lower time frame for us to take an entry, which I'm going to show you guys in just a second, we need to understand where is our target. So there are two ways that I can find my targets. One way is simply just target opposite side liquidity. So for example, if we have sell side liquidity here, right? Before price came down to sweep the sell side liquidity, what happened? Well, we pushed to the upside and we created a swing high. So this is essentially going to be buy side liquidity, right? Solid swing high that formed. We see that price moves away from it quickly. If we're going to take an entry here and look for long positions, we need to understand where price is going to gravitate towards. And as you guys can see, price trades into this buy side liquidity. And what happens? We have a reaction and then price spikes to the downside. right? That shows us that this is not on accident, right? Keep in mind there is an algorithm that moves price. So if you understand that, then you don't have to really second guess these trades when you see them. You simply just take the trades and move forward, right? So here we have buy side liquidity. Once we sweep sell side liquidity, if we have an entry opportunity, we're going to target buy side liquidity here, right? Around 3909.25. So now that we understand our target, let's go down to the lower time frame. Let's actually split the charts. Now we're going to link these up and we're simply just going to copy and paste. Perfect. So now that we're on the M5 time frame, the M5 time frame is not a bad time frame at all to use in order to take our entries. However, sometimes it's better to go to the M2 time frame where you can see a little bit more information. All right. I'm also going to turn on our time interval so we can be at the same time for sure. So let's just do this. Perfect. All right, so now that we can see both screens, we can see our higher time frame and we can see our lower time frame. Let's just make this a little larger. There we go. We'll move that down there. Keep it clean. Now, for your entry, you want to look to see if price is going to react to your sweep of liquidity. Okay, so what does that mean? That essentially means that you want to see if the market is going to shift in structure with momentum, okay, and volume. All right, so once we sweep this sell side liquidity here, as you guys can see, right, you see that price runs into that M15 swing low, and we have a shift in market structure with this pattern here. So let's actually go over that pattern. All right, so we can see that essentially price sweeps liquidity here on the M2 time frame. Right, sweep liquidity, we push to the downside. We can actually say that this is a break of structure. Push to the downside, we're creating more structure. In order for price to shift in structure, we would have to see price trade back above this region here. And that is exactly what we see, right? So that's step one, looking for our entry opportunities at the reaction. Once price pushes to the upside, right, then we want to see if there's any type of imbalance with the volume that is in the market. Right, so here we can see we have some imbalance here. All right, and remember, all of this information that I'm going over is taught in depth within my course coming this week. All mentorship students, you guys will gain access to that course free of charge, of course, right? I said course twice. Anyways, so here we have a little bit of imbalance. All right, price runs into that imbalance, and this is where you should have taken an entry if you were looking for buy opportunities, right? So as soon as price taps into this area, and keep in mind that we are still within our timing, right? The end of the session is at 12. That's when I stop trading. So as long as we take an entry before 12, we are good to go. Now, as you guys can see, we're risking about 13 handles. All right, we should be looking for at least 2R on this trade minimum. All right, so our target that we marked out is going to be right here. Now, as you guys can see, this is not 2R. So what do you do in that case? Well, in that case, you're going to measure the manipulated range, the range that sweeps liquidity, and then you're going to look to target the standard deviations off of the manipulated range. So let's go over that. So here's the manipulated range. We know that this is the manipulated range because we have two bearish candles that push to the downside that end up sweeping liquidity. And once that liquidity is swept, we can see that we have a decent buy opportunity, right? So our first standard deviation that we're going to be looking to target is going to be 1.5. Yes, you can definitely target 1, okay, which would be here. But as you guys can see, that doesn't give us at least 2R. So what are we going to do? We're going to target the next standard deviation and see if that's at least 2R return. As you guys can see, it is. And that is where we're going to be looking to target for this trade. Let's actually turn this on the M15. It will be much easier. There we go. Perfect. So as you guys can see, we haven't quite hit that standard deviation. Let's change this to the M5 just to clear it up just a little bit. So as you guys can see, we haven't quite hit that 1.5 standard deviation, but this is going to be a test for everyone watching this video, okay? Today is January 10th, 2023, and what I want you guys to do is go look on your charts to see if on January 10th, 2023, price runs into this 1.5 standard deviation around 3 92800. And as you can see, it is a 00 number, right? So this is an institutional level and this is not on accident, right? Before London session tomorrow, or it may be during London session, who knows, right? We're going to see price trade into this institutional level, and that is going to be a decent profit target if you were trading this morning's session. Now, if you're already out of this trade, I know most of my students who took buy positions probably got out here. Not bad at all. But just keep in mind, you want to look for at least 2R on your trades, and using standard deviation of the manipulated range is going to definitely assist you guys with doing so, right? So we're looking for about a 3.15% return if you took this buy position this morning. Remember, when you come to the charts, try not to have a bias. What I want you guys to do is hop on the charts. Don't even pay attention all too much on the higher time frames, right? Just simply utilize the rules that's within the course and take advantage of the charts, right? So tomorrow I'm going to be uploading another YouTube video for you guys going over a walkthrough of the AM session or the PM, whichever one provides the trading opportunity. Usually if I trade the AM session, then I'm not going to be trading the PM session. But if I don't get a trade opportunity during the AM session, then I usually will trade the PM session. So my PM session, I like to start at 1300 hours and I like to finish up around 1600 hours. So this is the range of time that I will be trading the PM session, right? So tomorrow I'll catch you guys and we're going to see what happens on the charts. If you are a part of the family, congratulations. Thank you for being part of the YouTube family. And if you're not, go ahead and hit that subscribe button and click that bell notification icon to be updated whenever I upload a new video. With that being said, I'll catch you guys on the next one. Peace out.